Good morning, traders. It is Wednesday, March 8th. We're about an hour and a half before the open. Going to try and keep this one fairly brief. Let's go back and take a look at our last pick. Let's look at the market. Let's find a new one. SHOP. In the last video I did Sunday night, we were looking to sell an out of the money put. I would like to acquire this stock below the 100-day moving average. So we were selling the $39 put, bringing in 50-cent credit, March 17th expiration. If the stock stays above that $39 level and I do not get assigned, I'm going to generate about a 5% return over the course of 2 weeks. That is a very nice return. Is it an exciting trade? No. It's not supposed to be. We're looking for some longer term swing trades right now that will help us balance out some of our day trading because a lot of the intraday ranges have been compressed. Yes, we had a really nice move yesterday. Awesome. We're going to talk a little bit about that. But in general, a lot of these trading ranges, there's not a lot going on during the day. We are in wait and see mode. Every news item that's pending in the next 2 or 3 days, the market quiets down and then we wait and see. That's currently where we're at. So we need to have some swing trades working. SHOP had the characteristics that I look for. I think this stock looks attractive on a longer term basis, technically. So if I get assigned at $38.50, I am a willing buyer at that price, and I still have major technical support to lean on. And you can see how it dipped below this upward sloping trend line and popped right back above it. We had very, very heavy selling yesterday, and look at what the stock did. It was able to hold up extremely well. We'll go into that 5-minute chart, and you can see this is not a bloodbath. Yesterday, the S&P 500 was down huge. I can overlay that as well so you can see what the SPY did. It cratered. What did the stock do? It pulled back initially with the market, and then it held that low of the day. I view that as a very good showing, and you can see that most of the day, orange line above zero, it preserved its relative strength. So SHOP, I like it. So let's take a look at what the market's currently doing, and then let's find another pick. So right now we had this big red candle yesterday. This is when Powell started to speak. This was material. I didn't expect a lot. I'll be very honest with you. I thought it was going to be the same old grandstanding before Congress where they pepper him with shots about how poor people can't afford to pay their credit card bills because interest rates are so high. How can you justify increasing interest rates? All that type of nonsense. But he actually came out with something pretty material and said that they see persistent inflation. They do see a fairly strong economic backdrop, so they feel that they've got the latitude to continue to hike rates. Well, the probability of a 50 basis point rate hike in 2 weeks went up to 80%. That is substantial because everybody had been looking for a 25 basis point rate hike. So you get this big, long red candle. I don't watch the news. I'll be very honest with you. I trade in a vacuum. I don't need to watch what the news headlines are. Here are the clues that I was watching for. One big, long, solo red candle on a Powell opening remark is not going to scare me. And I'm not going to give it much credence because I figure there's some type of knee jerk reaction and the news is not going to be that legitimate. In this case, I was wrong. I probably would have done well to watch the headline, but I didn't really need to because I couldn't short that anyway. By the time this candle formed, boom, it was already down here in like seconds. You have these large proprietary trading companies, and they will scan those opening statements and they will look for keywords. And as soon as they see them, the bottom drops out. Okay, so you weren't able to short here. Now you got to watch and see what happens. If it's just a solo, oftentimes you'll see long red candle like this, and then green candle, green candle, green candle, and it's reversed. So you have to wait, see what plays out. In this particular instance, you could see how we start stacking some green candles, but half of this long red candle is preserved. Well, if this was just a knee-jerk reaction, you would have seen that immediate retracement. And the fact that we didn't, and the fact that this bounced back was stubborn, told me that, yeah, this is probably going to stick and we're going to see some additional selling. Well, then you get a red key bar, and now we're back through the close of that long red candle. Obviously, when you get these long key bars, you want that opening price preserved, and you want the halfway point preserved, because that tells you that sellers have offers layered all the way up here. They are looking to sell, 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 and they are hoping that the market gets high enough for them to get filled because they are aggressive. And when they see that they are not going to get filled, then they start lowering their ask and lowering their ask, and eventually that keeps a lid on the market and that preserves that halfway point. And now they're starting to get worried that, uh-oh, we see the bid starting to soften. Start hammering it because we want to be short. And that's why this type of price action unfolds. You can see if you read the candles and you know how to read price action, the candles are telling you exactly what they are doing. In any event, we get this next wave lower and we have a new low of the day. All right, now the selling pressure is on. You easily could have shorted in here. We have heavy volume. That tells you that this move lower, it is legitimate. So we get this little chop down in here. Now we're starting to establish some support. The tiny bodied candles are one sign, the mixed candles are another. We're starting to get some overlap, so we can expect a bounce. Here's the tell of the day. So we get this bullish 1OP cross. This is where we would expect a nice bounce. What do we get? Well, we get a green key bar. Okay. Then we get another one. And initially, this is looking really good because remember that this long wick right here tells you that at one point, this was a stacked long green candle. But we don't act on it until the candle finishes, because sometimes the character of that candle changes dramatically, even in the last few seconds. So this finishes actually as a bearish hammer. Okay, well, the next candle, they try and get back to that high, but they can't quite get back to it. Again, it finishes as a bearish hammer. 1OP getting a bearish cross in here. It can't get back to the zero line. It just barely does. We know the volume is heavy. These are the tells. This is resistance. This is selling pressure, and they are hammering the price back down. So now the market gets into this steady decline, and we have a bearish trend day. Yes, you get a little bit of a relief rally. This is some short covering into the close. This is the big point. What's that going to look like on a daily chart? This is fairly bearish. Let's put up the major moving averages so we can see where those come into play. We'll put up the 200, put up the 100. Actually, I could just put up any one of the three, and they're all pretty much going to be the same because you can see that these major moving averages are converging. This is a big, big support level. And if it's breached, it's going to be significant. Well, the market was able to drift down lower to that 200-day moving average. This was not a strong move. And I've been pointing this out over the last couple of weeks or so. And the way that we know that is that we don't have these stacked red consecutive candles on heavy volume. Volume's been okay on the drop, so we have to respect the move. But the opens have been very close to the close, and that means that the bodies of the candles are tiny. And we want to see those long red candles. Those are a sign of persistent selling. When they're tiny like this, it tells us that buyers are still out there. So now you get this relief bounce right in here. Okay, this looks pretty good. We're going to keep going up? No, probably not, because we haven't seen any stacked green candles either. We've been back and forth sideways. But I will say this on the bears' behalf. is that now that you've had this little release right in here and you have this long red candle, this is actually looking like a little bit of a bearish flag that could form. And you can see this is the opening indication today, a little bit lower and below that 50-day moving average. So now, even though bears could not get a lot of momentum going in here, they might be able to get it here because they have a running start at these major moving averages on a very short-term basis. Yes, I think this sets up well to be short over the course of the next couple days as far as your day trading. As far as your day trading. Had to repeat that. I'm not overly bullish here. I'm very market neutral. I have a slight bullish bias because I think the market's going through a longer term bottoming process. But on a short term basis, on a day trading basis, you betcha when we get heavy volume and we have selling pressure like we saw yesterday, yeah, absolutely. You want to be day trading the short side. The point to my videos right now is I want to have you ease into some swing trades. In the last year, we have almost only been day trading because the big moves overnight did not justify taking overnight risk when we were getting big intraday ranges. That's changed. You can see that's changed. Day trading is getting very hard. But yes, we do have still some good days like this, like this, like this, where we can day trade. So I think there are going to be some great short-term day trades setting up over the course of the next couple of days. I see us definitely assaulting that 200-day and 100-day moving average around that 393 level. And if it is blown away with a long red candle right through it, and we close well below it and we start staying below it, then I will respect it. But until then, I'm expecting maybe we poke through it, rally back above it, maybe we poke through it, rally back above it, just kind of sideways movement. We've got the CPI coming out next week. We have the ECB. They're going to be raising rates by 50 basis points. Then the week after that, we've got the FOMC statement. So those are some potential dark clouds. We also have the jobs report on Friday. It's likely to come out fairly strong. What does that mean? Good news is bad news. Good news means people have jobs. The bad news is that the Fed is going to lean on that, and it still gives them latitude to increase interest rates, which is the big fear right now, that they're going to go too far and they're going to send the economy into a recession. So those are the factors and the influences that we're having to deal with right now. I still believe, okay, the Fed raises 50 basis points in 2 weeks. Are they going to go 50 again in April? Are they going to go 50 again in May? Are they going to go 50 again in June? No, probably not. We are getting closer to the end of the tightening cycle than we are to the beginning of it. So I'm not overly afraid of what might happen to the market because the economy has been super resilient during all of this, and it's taken the brunt of the blow for the last year. We'll see if that continues. China's opening up, so that should also help economic conditions. Any improvement in inflation would go a long way. The hourly wages component of the jobs report Friday will be important, so watch that. You want to see it zero point 0.4 or lower. 0.3 would be even better because that's the largest input cost for employers. So the point to be made is short term. I think there's still going to be some really decent bearish trades to be had. So I would look short side for those trades, but I'm not going to highlight them because I'm still looking for opportunities on the long side and I want to go farther out in time. I can't use the March 17th options expiration any longer because now we're only about 10 days away from it, so I'm not going to get any decent premium. By the way, I will show you all of my trades that I've done in my videos. These are highlighted trades, and I'll do that probably next week on maybe on expiration Friday. I'll review all of them. These are the swing trades that I've shown you over the course of the last 3 weeks or so. I think they're probably close to 10 of them or so. They're all doing very well, by the way. And I have had a couple of bearish ones mixed in there as well. So Let's take a look. Let's see what we've got coming up on our searches. I'm going to go into Pop Bull. It's one of my favorite searches for longer term swing trades, be they bullish or bearish. In this case, I'm looking a little bullish. So I will take a look at those daily charts first. And you can see these are our new trend lines, by the way. I love them. I love them for a number of reasons. You can see when a stock has multiple longer term trend lines that are coming into play, that means that there's going to be heavy resistance on the stock. Our first inclination should be that this resistance is going to hold. When the stock is able to blow through all of this resistance, that's significant. That tells me that this move has a very good chance of being sustained. And this is not a bad looking chart. You can see this bottoming process with a series of higher lows. Nice upward sloping trend line there. We've got these multiple breakouts. There's your earnings reaction. Could I sell a out of the money bullish put spread below that $72 breakout? Sure, that would not be a bad selection. So it'd be one that I would consider. FSLR is a stock that I've highlighted this year. I absolutely loved this breakout right in here, and I love the post earnings strength. Tiny bodied candles at the high tell me there's some resistance forming in here. So I would not want to be buying this stock until I get a decent pullback and I check that breakout. Then, yes, big market sell off, stock preserves that breakout. Yes, then I'd be looking to sell an out of the money bullish put spread on it. UAL, airlines have been doing fairly well recently. Travel miles are back up, downward sloping trend line. This is a bullish flag formation. There's your flagpole, downward sloping trend line. Yes, this is a decent looking stock. By the way, we can search for these breakouts and breakdowns, these trend line breaches. So that makes them even more interesting to us. Finally, I'm going to go to OKTA. This also has a very long-term downward sloping trend line that was breached to the upside. Let's zoom out and see where that trend line comes into play all the way back here. This is a significant breakout. Again, we want to blow through it. We don't want to peck at it. We want to have nice long candles through it. You can see how this stock got pummeled and it's been able to rally quite nicely, and it has actually been strong relative to the tech sector recently. It's above the 200-day, it's above the 100-day, it's above these major downward sloping trend lines that we call high minus, and it has relative strength and good volume. And it is trying to fill this gap in right here. So it has a lot of qualities that I like. This is a nice bottoming process with lots of higher lows. So I would like to try and buy this stock, and I could sell some naked out of the money puts on this. That would be one strategy. I could get a little bit more aggressive with it as well, and I could sell an out of the money bullish put spread. That's what I'm going to be opting for. What is it that I like so much about this stock? What tells me that it wants to go higher? We've got this nice upward sloping trend line. You can see all the major moving averages, but the real tell for me is the earnings reaction right here. You can see how the stock popped up. Let's zoom in. You'll be able to see it better. So we have this big rally right here. There's your earnings announcement, the A. We've got this beautiful breakout here. Look how well it's been able to hold these gains, especially on a day like yesterday. Very telling. So let's go into the 5-minute chart. Remember what the market did yesterday. It got hammered. Put up that SPY chart. These are the tells that you need to be looking for. Gray line, SPY, down. What about the stock? Up for the day, and it held the gains throughout most of the day. Why does this happen? Shouldn't this stock be down? Don't 75% of all stocks follow the market? Yes, they do. Well, what does this tell us when the stock does not go down with the market? It tells us that long-term buyers are lined up. They don't care that the S&P 500 was down today. So, yes, there's going to be natural selling pressure on OKTA because they recently had an earnings announcement and the stock recently ran higher. So anybody that's been long the stock in here might be tempted to take these gains. When they see a weak market, wham, 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 they're selling, but they're not driving the price of the stock down. Why? Because there are buyers lined up. They don't care what's happening to the S&P 500 today. They want to own OKTA for the next 6 months, the next year, the next 2 years. They want in. And that's how we know the institutions are out there supporting the stock. If they're out there buying the stock, my objective is to follow that trail of breadcrumbs. I want to do what the smart money is doing. There's this old saying on the street that when the tide goes out, you can tell who's wearing a swimsuit and who's skinny dipping. Well, right now, when you get a big market sell-off like that yesterday, the tide is going out. And I'll tell you, OKTA has a swimming suit on. So I want to sell an out of the money bullish put spread on this stock. Yes, I feel that the market has a chance to go down over the course of the next few days, maybe even the next week or two. So I'm going to distance myself from the action. I can't go out to the March expiration. I have to go out into the April expiration so that I can distance myself from the action, generate some decent credit for the spread that I'm looking to do. What is a natural place for me to want to sell that spread? Well, I'd like to be down around that 200-day moving average. That's at $75. If I pull this down, you'll see it's at 74.47. So the trade that I'm going to highlight is to sell the April 21st $75 put, and we are going to buy the $70 put. There's a $5 difference between the strike prices, so I'm looking to bring in a dollar credit. It's currently 80 cents bid, offered at 95 cents. But Pete, how am I going to get a dollar for these when they're bid 80 cents? Well, you probably could get 85 cents for this right now. I think the market's going to be pulling back in the next day or two. That selling pressure that we saw yesterday, it's not going to go away. Shorts have a running start at these major moving averages. They're afraid that the Fed is going to hike rates. I'm expecting these major moving averages to get tested again. When that happens, we're going to see some selling pressure in OKTA. And we need to see that selling pressure or we are not going to get filled on our spread. So I want to do that spread for a $1 credit, sell the April 21st 75.70 bullish put spread, get a $1 credit. If it expires worthless, my risk on that position is $4. I brought in $1. 1 divided by 4 is a 25% return over the course of 5 weeks. It's a very nice return by any measure, and it gives me lots of distance from the current strike price. It is 2 standard deviations out of the money. It is above major support. We've had these trend line breakouts. We've got an upward sloping trend line. These all increase my odds of success. So yes, look for a little bit of market selling. Favor the short side with your very short-term trades, your day trades, overnight swing trades. Expect us to test these major moving averages on the SPY on a longer-term basis. Use a balanced approach. The market's going to move sideways. It needs to digest all of this news. I feel that stocks are rich right now. They're going to have to grow into their valuations for the next 6 months, but I do think the Fed is closer to the end than the beginning, and the market price action has been telling me that it's moving sideways. It's not going anywhere. So if you happen to have more of a bearish bias, sell out of the money call Credit spreads. I've highlighted a few of those in the last few weeks. If you're a little bit more bullish like I am, look for those super strong stocks like OKTA. So out of the money bullish put spreads. Those are your swing trades. Those are your core positions. You're going to be taking advantage of time decay so that when you have those very tiny bodied candles in those tight intraday ranges, you're not sweating it that, gee, I'm not making any money on my day trades. You've got those longer term trades working for you, generating income, distancing yourself from the action. You have to start transitioning into some swing trades when all you've been doing is day trading. It's uncomfortable to start doing swing trades. So selling naked out of the money puts to generate income and to try and acquire the stock at a lower price. Great strategy. You're not sweating it because you want to buy the stock. Those are the types of things that you should be initiating. The swing trades you should be initiating right now when the market is still forming a base. It's not go get bullish time right now. So I hope that this video helps you. Thanks so much for watching. Please leave your comments.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.